Going to check on the business news for you now on France 24. Stephen's joining us here in the studio. Quite a big business day, isn't it, Stephen? Stock markets have absolutely taken a hammering. They've been plunging, haven't they, in Asia?
That's right, and it's now being called a global market meltdown as European shares begin trading. This started on Wall Street on Wednesday. Some stock markets in Asia having their worst day in 10 years. A sea of red at the open in Europe as well. Every sector across the Euro Stoxx 600 index opening sharply down. In fact, very few shares at all in Europe seeing gains. This is the picture at the open of the European markets. London, Paris and Frankfurt firmly in the red. And this follows falls that we'd seen on European share markets yesterday. The DAX, for example, was down 2% at the close, down another 1.4% today. The FTSE 100 starting the day down 100 points. It was at 7,200 points at the start of trading yesterday, now close to 7,000, so losing some of those milestones there. This mirroring the trade that we've seen around the world. Over in Asia, a rough day for shares there as well. The Shanghai Composite tumbling to its lowest level in 4 years in trading. The Nikkei in Tokyo closing down 4%, and really across the board, fairly dramatic falls. Technology shares, one of the worst hit sectors. But if you look at Chinese shares for this year, the Hang Seng in Hong Kong down now over 10% since the start of the year. The Shanghai Composite down by over 20%. That also all put together makes for a very bad 24 hours on the markets. But if we put this in context, we're not yet at the same magnitude of falls of what we saw the day after Brexit. What's unusual about this fall, though, is there wasn't necessarily a single incident on Wednesday that sparked this. It was more a build-up of concerns over rising interest rates by the Federal Reserve. Now, the sell-off has been exacerbated by comments from President Trump, who criticised the Fed for its policies. Yuka Royer has the details.
It's bad enough for investors when every single stock on the Dow turns red and all three Wall Street indices see their biggest one-day losses in months. But it's even worse when the US president attacks the country's central bank.
I think the Fed is making a mistake. They're so tight. I think the Fed has gone crazy.
Last month, the US Federal Reserve raised the benchmark interest rate for the third time this year and signalled it would tighten monetary policy further. A series of economic data in recent days raised expectations for another rate hike in December, pushing borrowing costs up. The volatility index, or the fear gauge, has nearly doubled in the past week. It's now at the highest level in 6 months. Inflation fears are not the only cause. The market rout comes just after the IMF warned the ongoing trade tensions would harm global economic growth.
I think the writing is on the wall that the Feds are going to keep interest rates moving higher. And I think this is what's causing the bulk of the ruckus. But, you know, those simmering tensions between the U.S. and China are certainly adding quite a lot of flavor to the mix.
Donald Trump also called the stock market rout a long-awaited correction. US stocks have been at all-time highs since the summer. While they aren't yet in correction territory, meaning a decline of at least 10% from a recent peak, shares could still have further to fall.
Well, let's take a look now at some more of the day's business news. James Murdoch may be in line for the chairmanship of Tesla. The Financial Times reporting that Murdoch, who's currently the CEO of 21st Century Fox, is a lead candidate for the role. Elon Musk has agreed to step down as chairman of the electric car company as part of a settlement with US regulators. That's over claims that he broke securities law with a tweet over taking Tesla private. He will stay on, though, as chief executive. James Murdoch is already on the company's board. He's a non-executive director currently. BMW is to spend more than €3.5 billion to take control of its joint venture in China. The car maker is upping its stake from 50 to 75% and has announced plans to spend another €3 billion expanding its Chinese factories. The move comes amid changes to the rules around foreign ownership of car companies in China. BMW had been hit by tariffs on imports of its cars into the country, many of which are made in the United States. And finally, for me, the owner of Snapchat is getting into scripted television. Snap is partnering with Viacom and NBC Universal to create original content for its social media platform. The videos will be longer than 10 seconds, though. Snap Originals will be about 5 minutes long. Companies will be able to buy ads of around 6 seconds during the episodes. The initial shows include one called Endless Summer, following 2 online influencers living in Laguna Beach, and The Dead Girls Detective Agency, which Snap is describing as a darkly comedic supernatural soap opera.
Okay.
It's got everything going on there.
Exactly. That sounds very impressive. I can't imagine a thing called Endless Summer only being 10 seconds. They'd have to make it a little bit longer as well, wouldn't they? Thanks very much, Stephen. Stephen with Business on France 24.